Hello, welcome to AML Compliance Lux channel. In this video I will explain you KYC and how to perform it according to Luxembourg requirements. Have you been struggling to understand KYC? Because you just started your career in compliance or came across this terminology? In this video I will explain KYC in 3 steps to what is KYC, why is it important, and how to perform it accurately. Please bear in mind that I will explain the KYC according to Luxembourg requirements, but most of the concepts are globally applicable. So, KYC stands for Know Your Customer, which is actually different from Customer Due Diligence, CDD. Most people confuse KYC with CDD. So let me quickly note the difference. CDD refers to the whole set of due diligence performed on the customer, including risk assessment, type of due diligence which includes more checks than KYC, and ongoing review and monitoring. If you want to know CDD in details, you can watch our dedicated video on CDD where I explain the process in and out. Coming back to KYC, it refers specifically to 1. Identifying your customer. 2. Verifying the identity of your customer. And that is what KYC is. It is basically know who your customer is in order to know with whom you are dealing with. Why is KYC so important? What is the hype about it? I will list here 3 main reasons why companies perform KYC and why regulators want companies do it. 1. It is important first and foremost for anti-money laundering reasons. What does that mean? When you identify who your customer is, this helps you to conduct further checks and make an analysis of if your customer has any links to money laundering or fraud schemes. I will explain this in more details further in the video where we see examples of how to perform KYC. Don't forget that the main purpose of the checks is not to detect money laundering but to check that your company is not being used for it. 2. The second reason why companies do KYC is because it is part of AML checks the company is obliged to do per laws and regulations. It is important to keep in mind that KYC refers again to the identification and verification of your customer. Because if you look at the laws and regulations, at least the Luxembourg ones, there is no reference to the exact term KYC, but rather to the identification and verification process. So, it is just a commonly used term in the industry. Companies do KYC to prevent being fined by the regulator, which can be financially material to the existence of the company. In some cases, it can even lead to removing the license of the company depending on the nature of the fine and non-compliance. 3. The last reason is the reputational reason. This is actually what companies care most. Because if there is any news media about the company having weak KYC controls, it is considered having weak AML controls, which in return can decrease the trust of other companies in doing business with your company. When you lose clients, it can have huge financial impacts which you cannot calculate, for example like in the case of having a fine by the regulator. Therefore, most of the companies are really worried about protecting their reputation. Now we know what KYC is and why it is actually important, let me show you how to perform it. To put it simply, it refers to 2 steps of checks. The first step is collecting documents about the customer, called identification process. What you do in this process is collecting information and supporting documents from the customer. The set of documents vary depending on if your customer is an individual or a legal entity. I will demonstrate the difference in more details in 2 different case studies in the next slides. To identify the identity of the customer, you would need the full name, address and tax identification number. For an individual, for example, the tax identification number can be their social security number, especially this is the case in the EU. The second step is verifying the identity of the customer. This means that once you collect the supporting documents like the ID and address proof documents, you need to check that the information provided by the customer actually matches with the information in the supporting documents. This way you can verify the identity of the customer. Once all the documents are collected and are all in good order, and the customer information is accurate, you verify your customer. In case any of the documents is not provided or would be missing, you need to request that document before completing your checks. In some cases, you may accept an alternative document depending on the policies of your company and on a risk-based approach. Let me show you in specific examples what kind of information and documents are collected usually for the purpose of KYC. Case Study 1. How to do KYC on an individual or natural person. Let's imagine that you work in a private bank, and Mr. Z walks into your bank and says he wants to open a bank account with your bank. The first step would be to ask him to fill out an account opening form, where he needs to indicate all his identification information like his name, surname, date of birth, place of birth, tax identification number, address, and so on. Another important information from KYC standpoint that he needs to indicate is the source of money he wants to deposit with your bank. When all the KYC information is collected, the next step is to verify all the information Mr. Z provided with evidencing documents. As they say, trust but always verify. You cannot blindly believe in what Mr. Z stated in the account opening form without any credible evidence. Types of evidencing documents might differ from bank to bank or company to company, but the usual general ones are the same everywhere. For example, the classic examples of evidencing documents are the ID copy of Mr. Z as account holder, his utility bill to prove his address, social security card to prove his tax identification number, and proof of the source of the money he is depositing in his account. Such proof could be an income statement, sale of a property, and so on. The main purpose here is to evidence that Mr. Z is the person owning the deposited money, and that money is not generated from illegal activities like money laundering. Last but not least, in case if Mr. Z is acting as a proxy, meaning he is depositing money on behalf of someone else, then he needs to show a power of attorney to do so and show all the above documents for the true beneficial owner of the account. Now let's have a look at the second case study, how to do a KYC on a legal entity. Let's take an example of a private company. A company X wants to open a bank account with your bank. What you do here, you also need to perform a KYC on the company. The set of information and documents would be slightly different than for Mr. Z. The identification process would start with the account opening form again. In the form, company's full name including the legal form, location. When I say location, please be careful that there might be different location for tax residence and operations of the company. If such is the case, then both locations need to be indicated and specified. Then the tax identification number and beneficial owner needs to be indicated, which is quite crucial for KYC purposes. For verification of the information provided for the company, we need the certificate of incorporation or equivalent document. In some cases, it may also be called a certificate of association or articles of association, which is fine as long as one of these documents is provided. We need then a copy of the commercial registry, also called as company's registry, which we need to make sure that the company exists. Then we also request applicable tax forms. Those forms can be a FATCA or CRS forms or both to verify the tax identification number and tax compliance of the company. If there is a beneficial owner of the company, then we also request all the documents mentioned in the previous slide for a natural person. In case there are more than one beneficial owner, then you request documents for all those beneficial owners. Once you collect all those documents, you check again if all the identification information is correct or not. If it is correct, then the KYC process would be complete for the company X2. Now we have seen case studies for two different types customers. Let me summarize key points for KYC process. As mentioned, KYC is not equal to Customer Due Diligence CDD, which includes KYC plus other checks. There is no legal reference to KYC, so it is a term widely used in the financial sector. You know now that KYC refers to the identification and verification of the customer's identity. Because it is part of AML checks and hence CDD process, it is a legal requirement to perform it. The purpose of performing accurate KYC checks is to prevent facilitating money laundering, fraud, or any other illegal activities that can damage the reputation and business of the company. Last but not least, which is really important, is that KYC checks might look boring, therefore may lead to a tick box process. However, it must never be a tick box process, as each type of customer requires specific checks, and that this process is key to protect company's reputation and business. If you found this video useful, please don't forget to like and subscribe to our channel. This will give us more motivation to create further content in AML compliance topic. Also, please comment below on what our next video should be about, or if you want to share your experience with any of the KYC checks covered in the video.